Hi, I'm Catherine McQueen and this is Smart Money, the show where we lift the lid on the hedge fund world to show you where the masters of the universe are buying and selling. It's been an interesting week as markets hold a long overdue correction due to coronavirus supply chain disruption, instigating a flurry of insiders getting in on the action and stocking up on their company's equity. Today we're looking at Cinemark holdings and recent trades made by their director, Roy Mitchell. 74,800 shares were purchased on the 26th of February for an average price of $26.71 by Mitchell in a trade that totaled just shy of $2 million. This took his total to just under 5.5 million shares with a market value of $142 million. Mitchell didn't quite catch the low of the dip, but his purchase represents a 17% discount on what the stock was trading at the start of the week. If markets bounce back, that's a brilliant trade. Let's take a closer look at Cinemark. The firm's return on assets of 3.28% is among the best returns of the industry, outperforming all of its industry peers who averaged 3.09%. Its return on equity of 13.21% is among the best returns in an industry which averages 6.76%. Cinemark has a profit margin of 5.83% and its price-to-earnings ratio of 15.93 is rather inexpensive when compared to the industry average of 16.60. This and its forward price-to-earnings ratio of 13.96 suggests that the company is priced cheaply. Based on estimates for the next 2 years, Cinemark will show a quite strong growth in earnings per share, 14.58% on average per year to be specific. Revenue showed small growth last year at 1.9%, but has been growing at an average of 4.56% over the last 5 years. Cinemark also has a better debt-to-equity ratio than its sector peers, coming in at 2.07. The firm has a yearly dividend yield of 5.4%, which is a nice return. The dividend has a limited annual growth rate of 7.2%. Looking at the technicals, we can see that there has been a gentle decline through 2019 into 2020. The recent sell-off has the stock trading at 2012 levels once more, which is likely a key factor behind Mitchell's decision to jump in. Both the short and long-term moving averages are heading lower, with the 50 providing upside resistance. But after closing last week with 2 up days, momentum has been climbing out of oversold territory. That's all we have time for this week, but please make sure to do your due diligence before making any investment decisions. See you next time.